Alright, everybody. Happy Tuesday. It is Tuesday, January 16th, 2024. And I think I neglected to say on over the weekend that it was the markets were closed on Monday. Sorry about that. It was Martin Luther King Day. And I actually didn't notice until after I did my video. So it was a welcome day off from the markets. And today was a slap in the face back in some ways, but at the same time, our automated trading systems did well. So let's jump in here. These are our automated trading systems. We got new green dots today on the YM, the Dow futures. The trades for today are here. And ultimately, it's not a lot, but it's more up than down. So that's a win. Our Russell 2000 new green dots. This pattern's been playing out for a little bit here. And 116, those are the trades for today. And the NASDAQ, which has been plaguing us, it's been starting to shoot back up to the right side. And this is our equity, by the way. It's not it's individual trades, but it's not like stock charts. It's not what we're looking at. So anyway, ultimately today was up 116. There were a lot of trades. Obviously, that first trade of the day was a big one. And then we gave a little bit back, got some, gave one out to a stop loss, and ultimately I think this pattern could be, I mean, it's not going to be without trouble, but if you see this one back here and even this one here, hopefully that's what we're shaping up to be, and we can get up back past these all-time highs in our equity. So moving on, the markets themselves were down pretty hard, but not, I mean, it's still just a lot of back and forth. I got this pattern drawn in that I drew in over the weekend, or for the weekend review, I believe, and looking for this. We're either going to bounce here, which makes a ton of sense because I think a bunch of traders might be getting on the wrong side of the market, um, falling out here and then bouncing maybe. But the there's a lot of bullish positions that are I'm going to say either hanging on by a thread or that need to really get reversed now. The market itself, the S&P 500, looks like it could unwind to the downside. Like I say, we're watching this trend line. Look at how that trend line that I drew in off of this chart on the left got respected today. I drew that in last week, and today's price came down to it. I'll zoom in there if it lets me. Came down through it and rejected off of it, making this hammer candlestick pattern right there. So, and then obviously the next candle respected it. So this is holding at that point. And when you see this thing break and close below it, because especially now that it's respected it, once it breaks and closes below it and comes back up and retests it, if it does that, I could see this thing finally playing out to the downside. However, I think there was enough movement today that we could get a bullish move in the morning and then maybe a bearish move later on. But at this point, this thing sure feels like it has to unwind, and anything's possible. The markets can do whatever. But you can also see this indicator we have in the middle here, our EMA indicator, is all red. It's reversed. The white lines come up into it, and if you look back here, it's reversed like this. The white line comes up into it, and it's a possibility of a move like that. So that's what we got going on here. Now back here, when it happened, the price itself, the candles themselves turn red too. So we don't have that going on yet over here. We started to, and then we got green. So that's why I'm saying a little bit of possibility of getting some moves higher just to confound everybody before it rolls over. Not to mention uh, just some wave analysis that we have going on inside of some of these indicators at the bottom. And yeah, I guess I should call that out. I moved this bottom indicator back to a MACD. Um, just working with different indicators for different buy, sell, uh, extended, um, overbought, oversold, those types of indications. And but in the meantime, it doesn't change my base strategy, which is really this 30 period moving average, going from a uptrend green to a downtrend red. All right, the Russell has already started doing everything I'm talking about, and the Russell tends to move first. Why? Russell is small cap stocks, which means they're small caps. There's not a lot of volume, so in order to move them, it takes um, some interest, and they move typically first to the downside, and they also move typically first to the upside. Now that there's been a little decoupling of that in the last year, but it literally, like, to sell them, it means institutions have to be letting them go, and for them to be going down like that, and it's just because they're so they're not that liquid. So they don't have a lot of volume. They're not that liquid. So in order, I mean, that's why they show up first, and so it takes a lot of uh, conviction on the part of the big institutions to move them in or out, for that matter. And like I say, you're already seeing this one turn red, and the prices turn red. Now, at the same time, this move down and back, this muted move back up, and then the move down here, um, we're overextended to the downside on the stochastics. So coming back up in this box that I'm drawing right there makes a ton of sense. So it's like watching paint dry. Sometimes it just takes a long time to unwind these things. And the Dow is still holding up pretty well up here. So we'll continue to watch that too. And if I draw any trend lines on this, I believe there's hardly any way to look at it that this hasn't broken to the downside already. So we'll keep watching that one. The NASDAQ. So the Dow today actually ended up down 231 points, which is only 0.62% because we're up in this territory of 17,000 ish, and but at the same time, a lot of people feel that move. I mean, 231 points is a big deal, especially people who've been in the market for a while. It just feels like a big move. So, of course, when you're getting, I mean, the big moves really nowadays are like 1,000 points in a day. The transports moved down 0.83%, and they look an awful lot like what the Russell looks like. There's got to be some Dow theory to that, but they obviously don't move the same way that the Russell does. But if you look at, or for the same reason, I should say, but if you look at the patterns here, at least here lately, the Russell and the Dow transports have been really watching, or they've been almost looking the same. So let's do that for fun one more time. Here's the Russell. Of course, it'll take a second to flip. Come on, computer. There we go. you don't say. There's a computer performance problem. So we had to move up. We've had a pullback. We're under the 30 period moving average. If we flip to the transports, we've had to move up. We've had a pullback and we're under the 30 period moving average. And in both cases, I think this ATR stop is flipped. All right, oil is just a lot of walking back and forth. USO went down 1.13% today. Had some oil stocks stop out today, which is hopefully isn't foretelling this position, but if it is, it is. BP is one of them. Let's take a look. So that one cut through the bottom, and I would say that the odds have moved to where USO is going to do the same thing. But we'll see. I'm not going to, obviously, I'm not going to close the position just because of that. We'll see what happens. One snapback rally tomorrow could literally reverse it. And gold, GLD. And gold still looks like it's rolling over to me, but who knows? We've had a lot of back and forth lately. SLV. It's looking pretty ready to stop out, so we're going to know it soon. But we are oversold in the stochastic here, and looks like we're ready to potentially even, maybe just come up for a short-term rally. But we've got some indications on the hourly chart over here that maybe we could be shifting trend. Alright, that's enough stocks for today. Let's flip over and look at the bullish percent indexes and wrap this up. Industrials didn't change. NYA down 2.02%. It's at 61.97. It's got to go to past 60 to flip in a column of O's here. 1.57 to go. So we'll see. I'd say it's pretty likely at this point. The SPX obviously already in a column of O's, down 2.7% today. The OEX up 1.35%, and that's held pretty well through the day. And then the NDX minus 2.74%. So still a lot of unwinding here. That's my take. And yeah, really, it's either take good signals or keep your hand off of the, don't take new trades. Don't take new trades is probably the better way to go right now until we get good flips on the indexes. Otherwise, it's just hard trading. It's difficult, and you have to take in some some drawdown on your positions, and I'm willing to do some of that, but only to a certain point. So until next time, good trading, guys. Have a great night, and we'll talk to you tomorrow.